Hi there, and you have just tuned in to Dukascopy TV today. Well, portfolio money is still finding its way into big emerging markets, with 3.9 billion being pumped into emerging markets the week ending February 13th. Well, on this subject today, I have Rene Sieber, and he is Director of Dynagest here in Geneva. So Rene, do you think currency risk is actually quite subdued, considering there's a lot of money flowing into emerging markets?
Well, generally speaking, currency risk is rarely subdued, and as long as we're going to witness that kind of inflows, the risk is rather limited for the investors. But most of the main emerging currencies are managed currencies, and even in the so-called managed float, the currency risk subsists. Most of the emerging countries generate today quite substantial current account surpluses, and this of course should limit the risk for foreign investors, as this situation rather leads to a tendency of appreciations of those currencies. But the recent experience of the Brazilian real or the Indian rupee show that this is not always the case, and there can be significant downside risk even in emerging currencies.
And Rene, looking directly at the case of South Korea, now its bank is quite concerned in terms of global conflict over currency policy. Now, do you think this is a threat to the financial system in South Korea?
Well, the concerns of the Bank of South Korea is obvious. Till recently, their main concern was the growth in the United States and in China, the two world largest economies. And obviously today the situation, there is a turnaround in the situation in these countries, in these two countries. In the States, as witnessed by the housing market and as witnessed by bank lending, growth is resuming. And obviously in China we are returning to a more sustained path in terms of rate of growth. So today the risk for a country like South Korea is the currency conflict that is probably starting to loom. The Japanese decided to weaken or try to weaken their currency, and obviously the new government has a policy that aims at weakening the yen. And for probably part of the emerging countries like South Korea, which is a smaller player but a more mature player, this is a risk to see the yen getting lower, because Japan still is one of their main competitors. However, even if in the States the Fed will probably not do much in order to avoid a lower dollar, the BCE made it quite clear that it will not embark on that kind of policy path trying to weaken the euro. So it's a risk, it's an obvious risk for countries like Korea, but it's not a major risk in our view.
Okay. And if we're looking more at banking regulations now, Basel III is really heating up in the media at the moment. What are you thinking in terms of this? What type of an impact would a possible dilution or of course any modifications in banking regulations have on global risks, Rene?
Well, this is a major topic today. It's also a very tricky topic to answer. One has to keep in mind that Basel III was the answer to what happened in 2008-2009, which was one of the major crises that the current financial system experienced. And if on one side the banking industry obviously says we don't have to go too far, there are many others who say we should go much further than what Basel III proposes, and specifically probably on the level of leverage that can be taken. You know that Basel III introduces a ceiling on the level of leverage. This is a very tricky question, but that ceiling is quite high. And one has to remember that in the States, before the 2008-2009 crisis, the US increased the level of leverage. And even though many academics, prominent academics in the States, were telling that more leverage didn't mean more risk, obviously this increase in the leverage was at the root of the crisis that was experienced. So, and you cannot say that more leverage doesn't mean more risk. What happened clearly showed that it wasn't the case. So today, even though one has to avoid to go too far, because we need to keep efficient financial markets, bolstering the safeguards is, in my view, obviously necessary in order to achieve, over the longer term, an efficient financial system.
And Rene, finally, just to sum things up, what other risks exist right now, and what should traders, investors and the general public be watching out for?
Well, we had the opportunity to talk about currency risks. Today, on the level of equity risks, probably the situation is much better. We are in a kind of Goldilocks economic situation, not too hot, not too cold, which is quite favorable for equities getting higher sustainably. One has, however, to keep in mind, that most of this favorable situation is also linked to highly accommodative monetary policies. There is a huge monetary easing going on with no risk of inflation in the world of goods and services, but we have obviously financial assets inflation. And as long as monetary policy is highly accommodative, it's favorable for equities. But this can come to an end, and besides, most of the major industrialized countries have unsustainable level of indebtedness, and at one point or another we will have to have the much needed fiscal consolidation, and because major industrialized countries have unsustainable level of debt, and fiscal consolidation will at one point or another deeply be needed, and this will of course be a major risk for equities over the longer term.
Now Rene, before I let you go, I have a Dukascopy very special question for you today. Now, if you had 1 million, where exactly would you invest it? Now, the choices are bond, gold, real estate, cash, oil, equities. What is your choice today?
Well, I would build a balanced portfolio where I would, according to what has been said before, where I would probably overweight equities, having in mind that the risks mentioned before are real risks, but obviously short-term, mid-term, I would overweight equities. But globally, again, it will depend on your investment horizon, and longer term, obviously, I'm preferring balanced portfolio with dynamic asset allocation processes, which will help us to manage the risk which are linked to equities, among others.
Thanks, Rene. Equities seems to be quite a popular choice at the moment. Thanks again for coming into the studio.
Thank you to you for inviting me.
And as always, viewers, thanks for tuning in to Dukascopy TV today. Now, don't forget to have a look at the website for many more interviews, and of course, have a look at our Facebook and Twitter pages. But for now, goodbye.